Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 415 on February the 20th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Cipher Mining, Core Scientific Inc., Carnival Cruise Lines, and NuScale Power Corporation. And we discuss 4 new trades on the 2X Long VIX Futures ETF, SELLAS Life Sciences Group, First Majestic Silver Corporation, and BitMine Immersion Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets managed to finish the week a bit higher than last week. The Dow Jones Industrial Average grew 125 points, closing at 49,625 points on Friday. The S&P 500 index picked up 73 points, ending the week at 6,909 points. And now it's time for the topic of the week. The topic of the week is inverting risk. I could also say flipping risk. The real question is, which one is riskier than the other? If I pay 60 cents for a debit spread and I sell a credit spread at 40 cents, meaning there's a maximum possible loss of 60 cents, which one is more risky? Have you thought about this before? Typically, the first response in your mind gives you an idea of which one of those you're more comfortable with. Some people are more comfortable buying a spread because they know that the most money that they can lose is the amount of money that they pay for the spread. Some people are more comfortable selling a spread in order to collect money. Their goal is to always collect money on every trade. So they look to sell iron condors or sell spreads or anything else that allows them to receive money rather than paying it. In the above example I gave, both spreads have 60 cents at risk. As it pertains to risk, these are the same trade. You should actually look at them the exact same way. It may take you a while to agree with me, but that's the way the math works out. 60 cents of risk is 60 cents of risk, whether you paid it out or received money first. The only additional variable that could make these two different will be the treatment of capital at your brokerage firm. Different companies handle margin on spreads differently, so use of capital is always a concern. That's why you don't hear me considering cash secured puts on stocks with a high price. My goal is to get a decent return on my capital, not have a large amount of capital locked up for a small return. So, assuming your brokerage does not treat debit spreads differently than credit spreads, 60 cents of possible loss is the same, whether you decided to buy the spread first or sell the spread first. Hopefully this will help as you navigate trade opportunities in the future. I truly am indifferent to buying or selling a spread. I just want the numbers to work out and the likelihood of the stock to finish in the direction that I want it. While I will never be emotionless like an algorithm, I want my biases to be on specific aspects of trading that are not nearly as objective as math. So that's it for the topic of the week. Let's go ahead and get right into the review of last week's trades. We're going to start off with the covered call on Cipher Mining Inc., symbol C as in Charlie, I as in India, F as in Foxtrot, R as in Romeo. At the time, the stock was trading for $16.41 per share. I looked at buying stock and selling the March 17 call at $2.11, hoping for a return of 16.45% in 5 weeks. Well, shares of Cipher Mining lost $1.76, ending the week at $14.65 per share. The call option we sold lost $1.05, leaving us with a net loss of 71 cents if we were to close the trade out immediately. Now, the stock price is still 35 cents above the break-even price, meaning this trade is currently profitable. Sustaining such a loss in the opening week typically leads to an adjustment, but not this time. Thankfully, the near the money calls are priced high, which would allow for the recouping of nearly all of our initial loss while keeping a little bit of upside. In plain English, for now we can hold off on making an adjustment. If the price continues to head lower, I will look to roll the strike of the call option we sold lower. For now, no need to do anything just yet. Next up, we have our cash secured put. We did a cash secured put on Core Scientific Inc., symbol C as in Charlie, O as in Oscar, R as in Romeo, Z as in Zulu. At the time, the stock was trading for $17.82 per share. I looked at just selling the March 17 put at $1.86, hoping for a return of 10.94% in 5 weeks. Well, shares of Core Scientific lost 49 cents, ending the week at $17.33 per share. The out-of-the-money put option that we sold gained a nickel in price, but remains out of the money. The break-even price is still more than $2 away, meaning this trade is still very profitable for us, so no need to make an adjustment at this point. If the stock continues lower, we definitely need to have a plan in place for how we will manage the trade going forward. Up next is our credit spread on Carnival Cruise Lines, symbol C as in Charlie, C as in Charlie, L as in Lima. At the time, the stock was trading for $31.76 per share. I looked at selling the March 31/30 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Carnival Cruise Lines grew 24 cents, ending the week at $32 per share. The out-of-the-money put spread that we sold is still out of the money. The stock price is more than $1 above our break-even price, which is a great thing. If the stock were to move lower, we would consider selling an upside call spread against it to create an iron condor, but we don't have to worry about that just yet. No adjustments are needed at this point. And then our final trade from last week is going to be a debit spread. We looked at NuScale Power Corporation, symbol S as in Sierra, M as in Mike, R as in Romeo. At the time, the stock was trading for $14.30 per share. I looked at buying the March 13/14 call spread for 61 cents. That could give us a maximum gain of 39 cents or a 63.93% return in 5 weeks. Well, shares of NuScale Power lost 84 cents, ending the week at $13.46 per share. The in-the-money call spread that we bought is now at the money. The spread has an intrinsic value of 46 cents, which is less than we paid for it initially, and the stock price is 15 cents below the break-even point. So we are well justified in considering an adjustment. You can sell the March 13/15 call spread at 70 cents. That would leave you short the 14/15 call spread at 9 cents. That's not enough, so we would also sell the 12/11 put spread at 31 cents. That would leave us short the 14/15 call, 12/11 put iron condor at 40 cents. That means we would have 60 cents at risk on the entire spread. Of course, we only have 61 cents of risk on the line if we do nothing. Now, it's always good to do the math so that we can compare apples to apples. I might give this a few days before deciding to make an adjustment. I will only do it if I truly believe the iron condor has a higher probability of finishing profitably than the original call debit spread does. So every day the stock price gives us just a little more information, a little more indication of how it's going to wrap up the next 4 weeks. So I'm going to hold off a little bit on making an adjustment, but just know that I'll be doing the math and I'm ready to pull the trigger on the iron condor the moment I need to, or the moment the math necessitates the move, right? So that's it for the review of last week's trades. Thank you guys so much for listening and following along with me. I know those can get kind of confusing, but if you are confused, I challenge you to do 2 things. First off, just rewind the podcast and listen to my explanation a little bit again. And then if you have further questions, just shoot me an email. I am totally behind on email because I've been working on another project tied to our option trading group that I mentioned. But that being said, you are not forgotten if I have not responded to you yet. Okay, that all being said, let's move forward with the show. Today, Friday, February 20th, is expiration day for all monthly options for February. All new trades on today's show will use the March 20th expiration for monthly options in the month of March. So let's go ahead and get going. Our covered call this week is going to be on an ETF. I'm looking at the 2X Long VIX Futures ETF. Symbol U as in uniform, V as in Victor, I as in India, X as in X-ray. The stock ended the week at $6.08 per share. I'm looking at buying that stock and selling the March 7 call at 75 cents, hoping for a return of 27.47% in 4 weeks. Now you enter this trade by buying stock for $6.08 per share and selling the March 7 call at 75 cents. This trade makes the most money if stock prices finish above $7 per share. The break-even price on this trade is $5.33 per share. In real terms, the stock purchase will require $608 and you'll collect $75 for selling the option. Next up, we're going to have our cash secured put. We're looking at SELLAS Life Sciences Group, Inc., symbol S as in Sierra, L as in Lima, S as in Sierra. Stock ended the week at $4.15 per share. I'm looking at just selling the March 4 put at 40 cents, hoping for a return of 10% in 4 weeks. Now you enter this trade by selling the March 4 put at 40 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price is $3.60 per share. In real terms, you'll collect $40 for selling the put option, and you will have $400 locked up just in case you need to purchase the stock. Next, we have our credit spread. I'm looking at First Majestic Silver Corporation, symbol A as in Alpha, G as in Golf. The stock ended the week at $27.56 per share. I'm looking at selling the March 26, 25 put spread at 34 cents. That could give us a maximum possible loss of 66 cents per spread. Now you enter this trade by selling the March 26 put at $1.79 and concurrently buying the March 25 put for $1.45. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $26 per share. The break-even price on this trade is $25.66 per share. In real terms, you'll receive $34 per spread that you sell and have $66 at risk. And our final trade on this week's show is going to be the debit spread. I'm looking at BitMine Immersion Technologies, symbol B as in Bravo, M as in Mike, N as in November, R as in Romeo. The stock ended the week at $20.13 per share. I'm looking at buying the March 19-20 call spread for 66 cents. That could give us a maximum gain of 34 cents, or that's a return of 51.52% in 4 weeks. Now you enter this trade by buying the March 19 call for $2.69 and concurrently selling the March 20 call at $2.03. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $20 per share. The break-even price on this trade is $19.66 per share. In real terms, you will pay $66 to enter the spread, and your maximum gain is $34 per spread. So that's it for this week's show. Thank you so much for listening. Thank you for sharing part of your weekend with me. I hope you have a fantastic weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.